All right, today we're cracking open a technical analysis report to figure out what happens when a stock goes through one of the most dramatic events possible, a near total collapse. We're going to be looking at Rubico Inc., ticker RUBI, a stock that has been on an absolutely wild ride. So let's dive into the data and see what story it tells.
Okay, so get this. Just 3 months ago, this was Rubico's reality. The stock was trading at a high of $2.85. Go ahead and lock that number in your head. It's the top of the mountain right before the avalanche.
And this is where the stock closed on November 13th, 2025, just over 23 cents. I mean, think about that. A plummet from its recent high that just wiped out a staggering amount of value, and you can bet left a lot of investors reeling.
So how in the world does something like this happen? Was it one bad day, a slow bleed over time, or something way more complex? Well, that's the big question, and that's exactly what we're going to answer. Think of us as detectives, and all our evidence is right here. The whole story is written in the data, in the charts, the indicators, all of it. And this technical report, it's basically our Rosetta Stone. It's going to help us translate what the market's been saying and really understand the forces at play here.
Okay, so before we dive headfirst into Rubico's data, we gotta understand the tools the analysts are even using. Think of it like learning to read a map before we actually start the journey, right?
At its heart, technical analysis isn't really about a company's profits or who the CEO is. It's about psychology. It's the art of reading the collective mood of the market, all that fear and greed and panic, just by looking at price and volume data.
First up, we've got trend indicators. These are super simple, but they're also really powerful. They just tell us the basic direction the stock's been heading. Is it climbing a steep hill? Is it rolling down a slope? Or is it just kind of coasting on a flat road? They give us that big picture view. And then we have momentum oscillators. Now, this is where it gets really interesting because these measure the energy behind a move. The best way to think about it is like a rubber band. If you stretch it way too far in one direction, what analysts call overbought or oversold, it's probably going to snap back. These tools tell us exactly how stretched that rubber band is. All right, our toolkit is ready. Now, let's actually apply these ideas to the Rubico case file. We're going to use these tools to decode what the market has been screaming about this stock. So when we pull up the trend indicators for Rubico, the picture is, well, it's brutally clear. There's really no ambiguity here at all. The market has been treating this stock like it's radioactive.
And this table just illustrates the point perfectly. The SMA, or simple moving average, that's just the average price over a set period. So the current price of 23 cents is just below the 5-day average. But look how far it is below the 50-day and 63-day averages. We're talking over $1.50. The report calls this entrenched bearishness, and you can see why. The stock isn't just falling, it's in an absolute free fall compared to where it was just a couple months ago. Okay, so the trend is just awful. Case closed, right? Well, not so fast. This is where the story gets a really fascinating twist. Remember that rubber band analogy we talked about? Let's check on the momentum.
This number right here, this is the Relative Strength Index, or RSI. It's a key momentum tool that goes from 0 to 100. Now, anything below 30 is considered oversold. Rubico's RSI is 13.94. That's not just oversold, the report calls it deeply oversold. That rubber band has been stretched to its absolute limit.
And the report sums it all up by saying the indicators are pointing to a stock that is primed for rebounds. So here's the crucial conflict. You've got the trend screaming, get out, but you've got momentum whispering that a snapback could be right around the corner. This deep conflict between the trend and the momentum, well, it puts Rubico at a critical crossroads. The data doesn't point to one certain future, but instead, it lays out 3 very, very different possibilities. So in the bullish scenario, that rubber band finally snaps back. The extreme oversold conditions trigger a sharp bounce. It's often called a relief rally. And if some positive news comes out, like a recent refinancing, that could just add fuel to the fire, maybe sending the price surging back up towards $1. But the bearish case is just as compelling. In this story, the downtrend is just too powerful to overcome. The report brings up a potential volume trap. That's where a little spike in trading volume tricks buyers into thinking the bottom is in, only for the price to fall even further. That, plus some negative factors like a recent stock offering, could just act like an anchor, sending the stock to even lower lows. And then there's the third path, which is basically purgatory. In the neutral scenario, the bulls and the bears just fight to a standstill. The price goes sideways, trading in a really tight range, and the volume just dries up. The market essentially holds its breath, just waiting for the next piece of news to decide the stock's fate.
So, with these three competing futures on the table, what's the report's ultimate conclusion? Where does the weight of the evidence finally land?
Now this is where it gets really interesting. The report calculates a risk-to-reward ratio of 40.37. In simple terms, what that means is for every $1 of perceived risk, the analysts see over $40 of potential reward. That is an exceptionally high ratio, and it just screams one thing: extreme volatility and potential.
And this quote just perfectly sums up the report's final verdict. It's a complete paradox. The stock is profoundly oversold, which creates this huge reward opportunity. But that powerful downtrend and all the other risks mean this is not an investment, it's a pure speculation. The report is basically saying there are opportunities here, but it warrants extreme caution. It's a high-stakes game, for sure.
And so we're left here with a stock teetering on a knife's edge. The technicals paint this picture of a brutal long-term collapse, but they also hint at this short-term momentum that's been stretched to the breaking point. So the final question remains, for anyone willing to take that risk, is this a devastating trap or the turnaround opportunity of a lifetime? The data has told us the story so far, but the next chapter, well, that is yet to be written.